Hi, everybody. It's been a couple of months since we did a public check-in, and a lot has happened. Before Thanksgiving, the consensus was pretty gung-ho about economic growth prospects, and the Fed was still viewing the rise in inflation as transitory. And then, bam, mugged by reality, the Fed pivoted to say that inflation was a sticky problem. And I'd like to share what ECRI was saying in the fall of 2020. Here in September of 2020 is when ECRI called an inflation cycle upturn, meaning a persistent rise in inflation way before others. And turning from inflation to growth, the rise of the Delta variant and more recently Omicron has been blamed for practically any weakness in any of the economic data. But here you can see that it was last May that we made a growth cycle downturn call. So that's important because, in other words, our clients were well prepared for both higher inflation and slower growth. And having the time and the access to do their due diligence on our contrarian calls, they're able to share in our conviction that the rise in inflation was cyclical, meaning persistent, and that the economy was well into a growth rate cycle downturn, irrespective of the COVID epidemic. And so understanding these cycle trends allowed them to prepare for the mounting risk of stock price corrections and also to begin preparations for the likelihood of a policy mistake. And so fast forward to January's wobble in the markets, and in the blink of an eye, you see many formerly gung-ho commentators jump from the economy's strong to maybe the R word. And that kind of volatility in their view or their outlook is hardly indicative of a robust process of risk management. And our process, ECRI's process, is designed to place decision makers ahead of the curves in inflation and growth, regardless of the salient narrative dominating the headlines. So looking ahead, despite the revisions and the optimism surrounding the jobs report last week, year-over-year payroll jobs growth remains in a cyclical downtrend, and the Fed is still tightening into a slowdown. So we're tracking the likelihood of several scenarios. Yeah, the proverbial soft landing is possible, but it's not necessarily probable. And while we're not forecasting a recession today, the risks are rising of a larger market correction or a recession or both. So we're staying tuned. You have to stay tuned. And if you're interested in a professional engagement with us, you can find us at businesscycle.com. And in the meantime, be well. Thank you.